in terms of mental models, for a great investor, what do you think two or three things one should be thinking of, one should be cognizant of? It's not easy to be invest over a long term, isn't it? 1 year success doesn't define anything. To be in the game for a longer time to succeed, what do you think are two or three key attributes?
Well, so as Peter Lynch like to say, the most important organ for an investor is not the brain; it's the stomach.
Yeah.
In terms of mental models, it helps to be familiar with a bunch of different mental models drawn from different disciplines. So that's what Charlie Munger calls his lattice work of mental models. And what I would say is, if you want to be a successful investor over the long term, at a minimum, there are a few kinds of mental models that you should be familiar with. The first mental model, or the first set of mental models, has to do with how businesses work, how they make money, earnings, cash flows, the fundamentals of how businesses work and how money flows in and out of businesses. There's a whole set of mental models there. So that is very important to familiarize yourself with. The second set of mental models has to do with psychology. So what are some common biases that we all have, and how those biases affect how we behave in the markets during both good times and bad times? How does irrational exuberance tend to affect us, and how does pessimism in the markets tend to affect us, and what do we do to guard against those kinds of psychological biases that we have? So there's a whole set of mental models associated with psychology that is important. And the third set of mental models has to do with the basic math of investing. So simple things like tax deferred compounding. So if you have a stock that doubles every year, and you just buy it in year one and then hold it for 50 years, you will get a phenomenal result over these 50 years. But then if you have investments that double every year, but you have to pay, you buy and sell at the end of, at the start of each year, you buy a stock and then it doubles. And then at the end of the year, you sell the stock. And then you keep doing this 50 times. But each time you have to pay a tax. You have to pay capital gains tax. Then the amount of money you'll be left with at the end of 50 years is much, much lower than if you could compound for 50 years and then pay the tax at the end. So there is some very simple math that goes into this. It's the math of tax deferred compounding. So there's a whole bunch of math models and simple mathematical results that give you a lot of insight into how investment related calculations work. So humans are generally very good at linear extrapolation, but almost everything in investing is exponential, not linear. And so we need extra math to be able to sort of convince us of things that don't occur to us intuitively. So it's good to familiarize yourself with a whole bunch of math models for investing related calculations. And this includes DCFs and reverse DCFs. And so basically all the things that we discussed before, that there is a certain amount of math involved in all of them. And it's good to familiarize yourself with that math. So I guess, the fundamentals of business, the fundamentals of the math of investing, the fundamentals of psychology. These are three things. And it doesn't hurt to know no accounting as well, because accounting is the language in which business statements are written, and it helps to develop a certain amount of fluency with accounting. So yeah, if you learn these areas, then if you cultivate a whole bunch of mental models associated with these broad areas, then it's very, very likely that you'll have good investment results over time.
That's fantastic. I think that's a lot of work, though. 10K
Yeah. Well, if you don't want to do the work, as Buffett said, you should be happy with investing in a low cost index fund, and then you get whatever the return that gets. If you want to outperform, then
you have to work like an outperformer.
well, yes, or you have to get incredibly lucky.